I hope y'all are having a great day today. My name is Daniel Holliday. I'm a licensed agent with the real estate house. I'm licensed in Kansas, Missouri, and Florida. Now, today, what we'll do is break down some of the things that you as a buyer will want to do to get prepared for home ownership. I get lots of questions from people that want to buy a home, but just don't know the basic steps to get prepared. So, this video series is designed to show you how to get yourself and your household prepared to be a homeowner. So, this first infographic breaks down some of the things that you need to do in order to prepare to take that home ownership journey. Yes, you can buy a house now, but there are certain things that you want to do before you begin your search. First of all, you want to get in contact with a real estate agent in your market. I'm licensed again in Kansas, Missouri, and Florida, but in your market, make sure that you find someone that's familiar with where you live and where you want to purchase. Also, you want to find a lender, a informed lender who can show you the best options for financing your home. Once you find that lender, make sure they take you through the pre-approval process. Now, the pre-approval that shows to potential sellers that you're qualified to purchase this home. Also, when you begin your home search, be patient. The shopping or the browsing period that you will go through, it may take you some time to figure out exactly what you want in a home, but be patient during that process. And then also reach out to companies that you may need help with as you begin that transition from renting to owning. There may be moving companies in the area that you want to make use of. That way, that burden's not on you and you can focus more on the home buying process. So, next, what you want to do is begin to track your budget before you begin that home buying process. What expenses do you have that you can cut out? What is your income? The income that you're making will factor into how much the lender pre approves you for. So if you have excess expenses, there may be some things you want to cut. You have your rent, you may have vehicle insurance, you may have a auto loan payment. Also, utilities you're currently paying, those may increase as you become a homeowner. So those things, make sure you factor in some of the increases in costs that you may incur as a first-time home buyer. Once you look at your budget, figure out where you stand with your credit. Have you even checked your credit report recently? There are three credit bureaus for personal credit scores that you want to reference. There are Experian, TransUnion, and Equifax. Those three scores are factored together for the lender to find out and determine how much to charge you for the interest rate for your loan. So, how do you improve your credit? Well, you want to check for errors on that credit report. Also, pay down any credit card bills that have been outstanding or higher than the recommended limit. Also, don't charge your credit cards to the max. Again, you want to keep those credit limits below 30% to maximize your credit score. Also, don't order new things during the home buying process. So if you need new furniture, if you need things for the home you'll be purchasing, try and wait on making those high ticket purchases until you close on your home. Those increases in those credit card balances could tip the scales on your credit score and make the difference between being approved or denied for a home loan. Also, don't be in a rush when you're trying to find a lender to work with. Make sure you do some comparison shopping to find the best rate for you. Now, your FICO score is comprised of different things that represent your overall score. Now, the amounts owed on your credit cards represent 30% of your credit score. Your payment history represents 35% of your credit score. The credit mixture represents 10%. And then the length of credit history represents 15%. And then lastly, any new credit you've established recently, that counts toward 10% of your credit score. Now, what are the different loan types that you should be aware of? You have conventional home loans, you have FHA home loans, you also have USDA and VA loans, but we'll talk about those after this slide. Now, what are some of the advantages and disadvantages of an conventional loan versus an FHA loan? There are some items here bullet pointed and highlighted that show you the advantages and disadvantages. Now, with the conventional loan, there is no maximum loan limit, but with FHA, there are certain loan limits that will be factored in to the approval for your FHA loan. Some disadvantages for conventional, they may require a higher down payment. Typically, 3 to 3.5% is reasonable for a conventional loan, but they may require more. Now, FHA, you're only required to put down 3.5%, but you have PMI attached to your FHA loan because you're putting down less than 20%. You don't have to put down 20%, but just be aware that if you put down less than 20%, whether it's conventional or FHA, you'll have that PMI or private mortgage insurance attached to your mortgage monthly statement. Some additional loan types, again, are USDA and VA. With USDA and VA loans, there is no limit. You can actually borrow 100% of the loan. It's a very, very attractive loan if you're in a rural area for USDA, or if you have veteran status, or if your spouse has veteran status. So those are very, very good loan types to look into. Now, one thing I always talk with clients about is there may be certain things in your credit history that you want to either have removed or provide documentation for in order to qualify for a mortgage. So, how long do you have to wait for a particular loan type if you've been through a foreclosure or a bankruptcy or a short sale? Well, this chart right here gives you those timelines for all the different scenarios. So if you've had a foreclosure and want to get a VA or a veteran loan, then you have to wait 2 years from the completion of that foreclosure process. However, if you've been through a foreclosure and want a conventional loan, you have to wait 7 years from the completion of that foreclosure process. So that's a big difference. That's 5 years that you have to wait. So make sure, again, when you're shopping for your loan, you have a detailed and thorough conversation with the lender about what's the best loan type for your situation. Now, this chart right here is provided by Consumer Financial Protection Bureau. And what it helps you do from where you are now to that home buyer goal, it shows you a roadmap of how to get to that destination. So it walks you through deciding on how much you want to spend on a home. It also, again, talks about mortgage options, how to get pre qualified or pre approved, how to find the right home and make an offer, compare loan offers, those things that we have discussed previously. It puts that roadmap on one form for you to have goals and also deadlines in mind to keep you on track as you go through the home buying process. Now, once you're pre-approved for a loan and you choose your realtor that you intend to work with, if you work with me, then there are certain things that I need from you before we start your home buying process. And primarily, those things that I need from you are: what is your availability? We're in a very competitive market right now. So, the more you're available to see homes, of course, the better opportunity to find the home that you want. If your availability is very, very limited, that's going to limit how much time we have to search for the home that you want. So before I begin working with someone, I just simply ask them, when can't you go to view homes? That way, when I'm searching for homes to show you, I already know what's the best time to see the homes and which times are to be avoided. Also, there are certain milestones that take place once you are under contract for the home that you want to purchase. That contract date, that's when you and the seller come to an agreement and your offer is accepted. Now, after your contract is accepted, then the inspection period will begin, and then you have a certain number of days to do your due diligence on the home you have under contract. Now, after you get past the initial inspection period, anything that your inspector may come across that you want the seller to fix, you'll want to make note of that and have a negotiation about what resolutions or repairs you want the seller to make to the home. Now, that conversation takes place between you and your realtor, and then the realtor will communicate to the listing agent what things you want the seller to fix. Now, if that resolution does come to an agreement, then you'll move forward to the appraisal process. That's when the bank will send an appraiser out to the home to make sure that this home is at least worth how much you're trying to get the loan for. They want to make sure that they don't end up upside down in this property by giving you a loan that's more than what the home is worth. Now, if all those things move forward smoothly, then you'll have that closing date where you will receive your keys to your new home.